Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, August 16th. Great to be with you guys this morning. D, Peter, Jaya, Kamal's in the room today. Zia, Ty, great to see you guys all this morning. So last webinar of the session, a quick reminder, Jamie will be up with the midweek strategy webinar shortly after. We're trading at some really interesting levels heading to the close of the week. So we do have some setups to cover, mainly all the dollar crosses. So we'll look at DXY, last night's update on Euro, Aussie, dollar yen, Kiwi dollar, and sterling. Although sterling hasn't really been a touch play for me yet. But just tracking this decline. We'll take a look at the commodity block as well, crude and oil, crude rather, and gold. I didn't get a chance to go over those yesterday. So we will hit those today. Peter, I see your question here on SPX. We'll definitely take a look. Some interesting price action going on there. Kiwi yen, not really a big fan, but Pete will definitely take a look for you. D also wants to take a look at Euro yen, so we'll hit that for D. And Kamal says, hi, Mike, big fan. Hey, cheers, Kamal. Great to see you in the room, sir. Welcome aboard. All right. As always, any questions or trade setups you guys want to review at any time, throw them on the message board. So let's jump right in. Last night's update. We do want to cover the Euro, but before we get into the Euro, I just want to cover where we are in the DXY. You know, we've been following this chart for months, years almost, it seems at this point. This is the weekly chart on DXY. You know, simplicity, I think Jamie couldn't have said it better with that tweet last night. Simplicity sometimes, elegance and simplicity, right? Basic trendline resistance. We talked about this yesterday, but the point being, heading into the close of the week, this is what we want to be paying attention to. You have basic slope support off the 2011 lows, a parallel off that high, give you a pivot, give you a support, pivot, break, acceleration, resistance. We have to see a weekly close above that to keep this upside momentum going. You have the upper median line parallel for the current operative pitchfork just off the last 2 years lows. That's just higher. And certainly intra-week, could we get higher? Sure. But what matters here is how we materialize the weekly close. So we've been talking about like 96.50, just higher at 97.20s, 97.10 is where you have that confluence of the upper parallel. We have to see how we close the week there. Also keep in mind, momentum is probing a breach above 70, right? Nothing matters on the momentum signature until that gets pegged there. That doesn't happen until the weekly close. So some things to be mindful of heading into the close of the week. Okay. Ty says he's looking for a move to the highs. I mean, it's still a breakout trade, Ty. I'm with you on that. We just have to be mindful of the close here. You know, a concerted close back below, or even if we close lower on the week, that would be the exhaustion play. All things held constant, you still want to be very cautious about trying to fight this. Here's what it looks like on the daily chart. Mindful that today, again, looks like we're trying to peak for a pullback below 70 in momentum. Here's what happened the last time we made that break. Looks like we could get some weakness if we get below 96.50 on a closed basis. All things held constant, we're still looking for that possible stretch into 97.10, 97.20, that same region we just looked at on the weekly chart, right? Sort of a really nice play, in my humble opinion, would be sort of a pullback here, rally higher into this region, on some divergence on the daily chart, maybe a pivot back below that structure we were following. That would be the onset of a larger correction trade. But the exhaustion isn't quite apparent just yet, okay? But we are looking for that basic play. Here's the intraday chart. Not really much to look at. You know, we're basically sitting at initial weekly opening range highs we broke. We're sitting on it as support. You know, major support doesn't come until 96. Bearish or bullish invalidation is still 95.50, same level we talked about earlier. So I'm still mindful. I'm getting too strong opinionated here on the DXY from these levels. Here's Euro, and it looks good from the Euro standpoint as far as a rebound. Now remember, again, 60% of the index is weighted the Euro, so we have to take both of these in view when we're trying to ascertain broader bias. But guys, look at the level we came off of. Okay, 113. There's a couple of different levels that are there. Daily chart has 113.07. This is what I showed you guys last night on the update for the weekly chart on the Euro. 12.99 is the just basic former swing high from back here in November of last year. but also former slope resistance. And this is basically what Jamie highlighted in a tweet last night off the 2015 swing high, 2016 swing high. You got a pivot there in 2017 before the break accelerated. Here's your first test of former resistance turned support, former swing highs in price. We can't ignore that. Right, Ty? I'm not going to just be mindful and just continue short euro just on the basis of I'm bearish euro. We broke trend. We got to keep looking for the downside. No, there's going to be interruptions in trend. Daily momentum is grounding into 30 here. You're coming off support. So there is some factors to look at that would suggest you don't want to just take a straight bull shotgun approach towards the dollar. We kind of really need to be mindful of these larger, longer term levels in price. And obviously, again, just a basic pivot in price. Look at the chart. Basic pivot. Forget anything I'm saying. Right? And then you have former slope support or former slope resistance to offer support. Add to that the uptrend, the broader uptrend slope, okay, the 50 line for this current formation, pitchfork off the lows from 2015. Here's that 50 line. Look at the vault here. Once we gapped above, is a breakaway gap. We never filled it. Hold, launch. It's the same region. It's the same region. So again, calling a turn is never a wise move, right? No one wants to be sitting calling the low. But I think it's something we have to be mindful. I can't just be blindly bearish into this support zone. So 113, is a pretty big level. The bigger level to the downside on the daily chart turns out to be 1186, 1160. This region right here. So you have a clear downside target in the event of a break, but right now the immediate broader bearish bias is at risk above 113. And that's what I wanted to highlight last night. So no change to any of the weekly levels heading into the close of the week. Watch how we react to that 113 handle on the close. Near-term resistance still 114.48. Here's what it looks like on the daily chart. Excuse me. Near-term slope just off the declines from the June-July rally and the consolidation. We were working with this slope, right? A parallel extending off of that May low was perfect support yesterday. And we essentially closed a doji. I mean, it wasn't a true doji. We were a couple of pips off on the upside, but the open was 113.43. The close was 113.54. All right, so a little 10 pip range there. But I mean, you can't make this stuff up, right? We can't make this stuff up. Ultimately, Ty, I think a rally here would give us a nice entry again. But at the immediate threat from here, I think you need to respect the possibility for a little bit more upside. I wouldn't be too surprised if we do ground out a little bit lower. 1275 is what I highlighted on the charts, guys, for you last night. Kind of a big spot, okay? We're basically looking for exhaustion at one of these two levels, either this slope or this little pocket of confluence support for a near-term recovery. Ultimately, that would offer a better short opportunity, but near-term, that's kind of what I'm looking for. Ty's looking for another test of the lows, and you could get it. Look, on some of these trades, Ty, the opening range objectively did close to the downside. So I would not be surprised if we ground out a Thursday, Friday low at some point. But I have to follow what price is doing, and right now, price looks pretty constructive. Here's what it looked like last night. And this is what I wanted to highlight for you, kind of just on its face. Excuse me. The 240 and the 120 both were showing pretty decent divergence into that slope support. Okay, I can't just blindly not look at that. We highlighted a pivot at 1366. Remember, Ty, we were looking at that last week, right? We didn't extend into it. We opened this week right into 1366 before we rebounded. There was a play here for the shorts and for the longs. And then last night we noted that, look, there's a little divergence. You're heading into confluence support. Now is the area where if you're going to get a little bit of a recovery, you'd start to look for that to materialize with a breach above 1366. So we broke above 1366. We tested it as support, and we're now kind of just dilly-dallying right in this range. On its face, the weekly opening range is still intact. So you kind of want to look for this to give you a little bit more of a guidance play into the close of the week. But ultimately, if we break above 1448, which we just noted, that would be the onset of a little bit more of a recovery play for euro. My personal expectations, just with the price action we've been seeing as of late, guys, I would not be surprised if this gives us some more sideways to lower action today, within the confines of the weekly opening range before a final breakout. Um, Ty, if we do ground lower and you do another test of the lows, it would be really nice if it makes another divergence signal like right into 1275. That's kind of the latest, that's the deepest I would want it to go. But the levels are pretty clean, guys. There's not much to fight here on this point. Um, Swing trades missed entry by 1 pip or so on the initial update that Jamie put out on SB Squawk. But if you were nimble enough on the approach into 35, there was an opportunity to get in. I mean, it literally missed it the low was like 130, 113.36. There was a clear signal to kind of jump in here, a little bit of a near-term consolidation in price. If you're looking at this real close like. So yeah, we're kind of looking to see if we can't get some resolution here. If this little consolidation pattern, if this is the breach higher, the extension 1448 would be the max you'd want to push on that. That's the level we need to break to the upside. One level you'd keep in mind that's not targeted here is just the objective weekly opening range highs. That's 1432. But still 1448 is the level I would need to see on a closed basis, on a break, to validate that there's a more important low in place. Till that gives out, Ty, I'm with you. We don't have the conviction. But from a probability standpoint, the levels which we're trading at, the type of divergence that we've seen, the shift in the momentum profile, okay? If we breach 60 here, it'd be a nice sort of tell. Again, that we're seeing some shifts in broader momentum structures, but 1448 is still the level to beat to really clear the way for a larger advance. Any questions on Euro? You do have the University of Michigan confidence surveys out of the U.S. tomorrow. Is kind of only last event risk for the majors from that standpoint. So we'll see if that shakes things up. All things held constant, still looking for confirmation that we have an exhaustion low at the one that we just made, or if we get a drive lower and this thing collapses. First of all, if you're in the long position on here, ain't no point of fighting it. If you get back below the Asia session lows, okay, I would bail. Basically like 1350s. I kind of bail on this trade. If we get the drive lower, again, it could be a really nice kind of spike, really just wash out opportunity to try to fade again. But we're just trying to stay objective. We're not trying to fight the trend. We're not trying to, be slick shooters calling the low. It's just former resistance, now support. You just have a whole lot there. If you're going to get a bounce, this would be a good spot. Make sense, guys? Okay, that's DXY number 1, Euro number 2, Aussie number 3, also highlighted in last night's update. You had a clear, bear flag in play, basically. So the weekly chart doesn't really have much for us to discuss here today. We know the structure that we've been following here. You're kind of no man's land. In Aussie dollar, either the break below really needs to materialize into a drop. Again, 71.45 was kind of the big level that we were looking for. Didn't quite get down there. We haven't made a weekly close below the median line, which is why for me, the decline we just saw, despite the fact we got so deep, basic structural support hasn't been broken, guys. It just has not been broken. Okay, so watch how it's a low conviction trade for me personally, but the data that we got was kind of mixed. The employment number was pretty interesting because it got a negative print of 3.9 thousand, and then the unemployment rate actually dropped from 5.4 to 5.3. Full-time unemployment was kind of the gain of 19.3 thousand. Okay, previously the big plus was that both previous revisions for the employment figures from Australia last night were upwardly revised from last month. So 58.2 thousand was the actual change for the previous month, and full-time actually gained 43.2 thousand. So decent underlying metrics, although the headline figure missed. Here's what Aussie looks like on the daily charts. Okay, and here's what we looked like last night. And kind of the major focus here was, look, 72 was a level we were watching. 2017 open. Near term, there's some slope there that we'll show you in just a moment. But on a closed basis, guess what? The 72.30 target held. And this is why I do all the work, guys, to put the daily charts on there and the weekly charts on there, because sometimes intraday price will head to these levels. They'll think you got the break. All right, below 72.30, I'm bearish. But all of a sudden, we pull back and close a daily close above it. Well, if I take this to a close, well, then it looks like we never even probed lower. So I got to respect that level. I can't just be ignorant of it and not even see that it's there. So we closed above it. We're getting some rebound. Okay, cool. Does this thing have legs? Well, ultimately, this is still a bearish trade, period. We broke a consolidation to the downside that shifted our focus lower. Both of these were near-term targets that we were looking for. We didn't quite get into 71. I think the low was just a couple of pips off, 70, or 72 rather. The low was 72.03, and then we turned. So here's the near-term structure. Okay, heading into the release, we had a basic bear channel in play. Here's the levels look like last night. We cited 72.45. Okay. If we were to break above this near-term channel, as we noted, that would basically alleviate some of the downside pressure. You'd be looking for 72.60. I still think we get the extension to 73. 72.98 is the target. Confluence region, guys, real basic stuff. 100% extension from the decline off the consolidation highs. So here's your triangle pattern, right? Extension off that decline, boom, boom, boom. The 100 saw support for a while before we pivoted below, and it's also the objective weekly opening range highs, right at 73. Add to that a basic 38.2 retracement of the decline from the highs that we made for the month. So this is your monthly range retracement, gives us a 38.2 right at that same exact level. Right at that same exact level. So look, I think, again, I think Aussie maybe has a little bit more to go on the upside here. Immediately heading into the U.S. trade session, I wouldn't push it. Kind of trend has been come into the U.S. trade session, just buy dollars for some reason. But we would need to get some sort of rebound to get back into this if you're not already in. If you are in this trade from last night, guys, most of it's off here. Okay, most of it's off here. If you want to leave a little on with a break-even stop, more power to you. That's fine. But you've essentially covered a big portion of the weekly opening range. I'd be looking for some sort of weakness here. If you're trying to get back in, you look for support back at 72.45 to see if we can get that last vault. But ultimately, this is kind of a big level for me. Now, Ty, I know you know the level, but I hope everyone else knows the level that would broadly put us back bullish. And we always have to have that invalidation level apparent and identified. For me, that's still 73.27 into 73.30. Yep, my man. That's still the level to beat. I mean, weekly, daily, it's all about that region. If we get back above that on a weekly close basis, yeah, I'm straight playing alongside for Aussie. I don't care what anyone says. But we're not quite there yet. First things first. On the other side of that trade, by the way, if we fail back below 72.45, I'm neutral. Okay, do not want to do anything with it. The downside targets, remember, that really matter if we make a break below 72 is 71.45 and 71.37. Remember, that's the actual measured move for the consolidation break. Technical analysis 101, measured move, the widest set for the consolidation. That gives you 71.37. 71.45 ends up being a simple former swing low from May of 2016. So the levels are pretty clear on Aussie, Watch out here, don't go chasing the long side from these levels. If we do pull back, I want to see support 72.45 max to continue favoring the long side, but I'm ultimately looking for reaction at 73. This might be a decent short, actually, for again, kind of a resumption or another probe into the lows. So I'm kind of looking to see how momentum reacts up here, how price reacts up here. But yeah, the focus for me is still on a like kind of ultimate last stretch in 73 here on this move. Okay, questions on Aussie? All right, number 4. Ooh, the abomination. Here's dollar yen. So dollar yen on the weekly chart has me still kind of looking for clarity. It's the weekly range has been pitiful. although the levels have actually kind of been not too bad. Oh, I'm sorry. Okay. Here's the weekly chart. So the only thing I wanted to highlight here before, because we're heading into the close of the week, is 1162. Okay. If we break above that, that would be it would invalidate the pullback trade that we've been in, or that we've been playing for the last couple of weeks. So that's the invalidation level. A downside break below 109.92, okay, is really what we need to see to get the drive lower. That, in my mind, would confirm that there's a little bit more of a significant high in place. Remember, 1327 was so critical. 618 retracement, the entire decline from 2017. Your long 200-week moving average. Your objective yearly opening range highs. It's all stacked up right here. And look at the reversal candle we made right off of it. So look, I mean, for all intents and purposes, 109.91 is still key support. We haven't hit it. So every time we've been playing this short, we've kind of basically been stopped out at break even on the quarter or whatever's left on the trade, because it can't seem to get below this 52-week moving average, which is what's holding up as basically near-term support. Here's what it looks like on the daily chart. Okay. We had a really nice reversal day yesterday. Got me really excited, back for the move lower. And here we are fizzling out again. Look, it's dollar yen. It's going to be a real tight sort of mess here, coil again, probably before it breaks out. Here's 109.91. Again comes up as a 38.2 retracement of just this year's advance, the 200-day moving average, and the 100-day moving average. Both of those, all three of those factors converge on basic slope support. So I really love that spot. It's dollar yen. I'm respectful of the fact that it is dollar yen, and just because I love that spot, it may never go there. But that's sort of the big spot that I've wanted to see on this downside move. I don't know if we get it or not. Here's the intraday chart. It's kind of been a chop fest. You guys know I've been trying to short every rally I can. I probably just missed a decent entry right here on this drop, but weekly open support, 110.46. All the levels remain unchanged, guys, from last night. Here's dollar yen on the intraday charts. Ultimately, if you guys remember, or initially on the weekly open, we were looking at 1113 being our bearish invalidation level. We kind of kicked that out a little bit to 1137 to accommodate a basic 618. That's where this thing found resistance. We broke lower. We found clear support, I should say, right at the weekly open again. This is where we opened the week, 110.46. Here's the rebound. We're looking for resistance ahead of that median line again. Looks like we're getting it. Nice 4-hour reversal candle here, at least a 2-hour. And a 4-hour reversal. Sweet. Bodes well. So again, near term or immediate support targets, 110.44. The big spot, 109.91. Okay, that whole area is littered with stuff. So look, it goes into 109.91, 109.70 is where the actual confluence comes in time now on the decline. 100% extension of the decline. So if we make two equal legs down, that's 109.56. So look, all three of those, just be mindful. Okay, if you're holding shorts, just watch on these entries or watch on these limits. Make sure you're taking or adjusting your positioning on a drop into that region. If we get back above 111.32.13, I want nothing to do with this. Period. End of conversation. At that point, if you pivot back above this, the risk is 112, and I don't want to be sitting upside down in a trade like that. So you guys know where I stand on this. Like it lower, sub 111.13, 109.90 is such a big spot. And again, it's kind of looking at this objectively on the hourly chart, looking for a change in behavior on the rally from the weekly opening range lows, overbought or hold at 60, shifted. We held support at 50 all of a sudden. Now break above 60, break above 60, break above 60, marking some divergence, market turns deep into oversold territory, what's the first thing you want to see on the recovery? You want to see resistance ahead of 60. Okay, that's basically what we're getting right now. So let's see if that behavior change holds. Questions on dollar yen? Oh, guys, I'm mistaken on one little point I was making earlier. I'm just looking at the economic calendar. I said there was no data. There is consumer price index data out of Eurozone tomorrow. I think this is the final read for July, though, so it's sort of the revision. Core is expected to uptick 2.1%, but outside of a big upward revision, I don't really think that's going to make a huge difference. Okay, that is dollar yen number 4. Questions, comments, concerns on the abomination, as it were. Keep in mind, again, objective. Just take a step back. Here's your weekly open. We simply made a weekly opening range, so we have to still be mindful of a basic break. You know, this 110, 111.30, 111.30 range. Okay. I guess before we jump into the commodities, I have them on the list next here. We should just probably finish the currencies up real quick through the majors. So I do want to hit dollar CAD. I didn't have it on the list, but tomorrow you do get those inflation figures out of Canada, the consumer price index out of Canada. So here's just a quick update on what that trade looks like. Guys, it's a mess. The intraday chart isn't still out of the formation. Just intra-week price action has just been, you know, straight weekly open, drop, rally right back into the weekly open, and it's all below this slope. So I really don't have a strong conviction on trying to play dollar CAD. What can I say on this? Here's what the daily chart looks like. And if I had to be something long the dollar, this is basically the one I would choose, just because dollar CAD or CAD strength has just been unable to fizzle any type of meaningful lasting strength. And on a look at the momentum signature here on the daily chart, looks like we tested that former trigger resistance as support, and here's the rebound. So I wouldn't be surprised if we try to drive higher into that slope resistance again. You know, heading into the start of the week, I was looking for a break below 31 to look for resumption back into the monthly open, back into slope support. Well, look at what this thing did. We broke and closed below 31, and then yesterday we just did an about face, outside day reversal, back into the highs. This is one of those scenarios where I think it could be an exhaustion outside reversal to the upside, just because, again, the way price action is acting, the slope of which we're testing now. Now, objectively, if we get above 31.65 into the close here, basically this upper parallel, we have to allot the fact of 32.25, even 32.50. But for me, I'm still kind of hesitant. I'm shy. I want to see what happens up here. It's not a very strong conviction trade. I'm trying to fade. And with the same respect, I mean, a long position against 31 would be the only play that I would be comfortable with. You have to leave some room here. I just don't like it, guys. I just wanted to bring up because tomorrow is the employment day, is the inflation data. So keep this in mind. Again, anyone who's new to the room, remember you always have that camera button on the top of your GoToWebinar screen. So if you want to take a screenshot of any of these charts presented, you can always do so. The levels broadly remain unchanged on dollar CAD since our last update, I think. Here's the dollar CAD update from earlier this week. Here are the levels that we were highlighting. No change. No change. Okay, that was dollar CAD number 5. Let's hit Kiwi real quick. Number 6. Another one that kind of just was a pretty elegant move as well this week. You know, the weekly charts didn't really give us a large area of support to work with. We were kind of worrying about a drop into 65.20, 64.50. Key region here on the weekly charts. So not really much to get excited about here. Kiwi daily and the intraday is what's got me going. Okay, we're still noting that divergence that we made into the lows. This is the intraday chart. Let me show you the daily chart first. Here it is. This is a newly identified slope that I presented to you guys earlier in the week. We were talking about Okay, we were talking about this newly identified slope off the highs for the year, modified pitchfork, lower parallel caught support. It was uncanny the way we tagged it earlier in the week. Now we did ultimately go for another low, but look where that low found support. Again, off that slope. Here's momentum. Looks like we're trying to peak back above oversold conditions. So initial resistance, you still have just above 66. Okay, 66 and change. Key resistance, bearish inval, 66.60. Okay, I don't know if we get quite up here. I do know that it's very similar to the Aussie trade and that the rebound, the bounce off support, same with the euro, kind of has me looking higher. But the higher is just within the confines of a broader down decline. So I'm just looking to play the rebound here. Ultimately, the risk is still 65.15 on the downside. But an area of which you'd start to look, right? Watch out for that continued short bias, getting too comfortable with it. Here's what it looks like. And the weekly open, or the weekly opening range, I should say, is still kind of intact. Now the play is the breach above 66.16, like I said, for this range. Or if we fail right here, again, it's that 65.16 level that converges on slope basically early into next week. So I liked it. I like the long side. There's divergence into the lows. This is really weak divergence below 30. You don't want to pay too much attention, but once you get that third signal or second signal, whatever, where it's above the extreme, either above 30 or below 70, then that tends to be a little bit more strong signal. We don't have a full-on reversal. The weekly opening range highs are still intact. You still have a pivot in price. 66.16 is the level that'll set me back up. Or give us conviction, okay, that a near-term low is in place. So the intraday chart is also unchanged. Okay, we drove lower. We found support at that. Whoa, that's pretty insane, right there. Dead on. Here's the rebound. You're basically still working within that confines of the downtrend. A breach above 66.16 would shift the focus for a near-term rebound in Kiwi. As disclaimer, I'm not into this. I haven't executed anything on this. I want to either be long off 65.16 if we get the drop lower. If we get the break above 66.16, I can't just buy the breakout. I need to wait for a pullback in that scenario, but I'd look to be defending against the weekly open. So that's kind of the best case scenario for trying to squeeze a play out of Kiwi, at least this week. Questions on New Zealand dollar? Okay, that is number 7. All right, let me just hit crude and gold real quick, and then Peter D will jump into all your requests. If you guys have any questions or trade setups you want to review, feel free to throw them at any point. As always, here's I guess let's hit crude first. This is number 8. Okay, we are at a big level, which we were targeting a while ago. We didn't think it was going to hit after we got that reversal last week, but we did do an update on this last night. Here it is. Okay. The level is 64.66, guys. There's a lot there. It's kind of a region of which it's either 64.66 where we're at right now, or 63.57 if there's any hope for the broader uptrend to remain intact for crude prices. Here's what we look like on the daily chart. Okay. Really clean slope. We've been following off the 2016 lows, 2017 highs, 2017 lows. Slope caught all the highs that we made this year. We broke below the 50 line. We broke below a parallel here earlier this month. Here's the level I'm looking at. This is the 618 retracement of the yearly range, so taking into account all of 2018 trading. It's the 200-day moving average right here. And basic channel resistance, a parallel, converges right there as well. Okay, now if we break the downside, again, why I'm starting to get a little bit less bearish now, 64, 66 was a big region for me. I was looking for that for a while. Again, this kind of faked us out. We thought maybe we had grounded out. We had some slope there, and then we reversed, but we made an outside daily reversal candle off the monthly open, 68.30s, off the 200, off the 100, excuse me, day moving average, and took us right back lower. Excuse me, it wasn't an outside day reversal, but it was a pretty big kind of reversal right off that level. So here's the move lower. This is your next sort of level of interest. You don't want to fight this level. A drop lower, I'm actually looking for a fade off of one of these two levels near term. Okay, don't have the conviction to do it just yet. Again, the weekly opening range broke to the downside. I kind of still think it might dribble lower before the end of the week, but I'm looking for a possible exhaustion trade off of one of these two regions. Keeping things as objective as possible, right, guys? Basic slope support. Here's crude on the weekly charts, just to put things in perspective for you. This is how critical of a region we are right now. Do you see this? Okay, now a basic 2, 3, 6 retracement of the multi-year advance from 2016 all the way to this year's highs. A basic 2, 3, 6 comes in at 63.63. The close low for that pullback comes in at 64.27. Guess what? That's the exact range we're watching right here. All right. So maybe a little bit lower in crude prices. If you're holding shorts, you might want to leave a little on the table, but certainly 64.66 was big. We're heading to the last couple of days of the month. I wouldn't be surprised if it slides, but don't get too aggressive any further beyond 63.57. If we materialize a daily close below that, I'm all with you. A soft target is 62.56, but you're basically looking for a drop into the 60 handle. Okay, that would be just a simple 38.2, nothing fancy. This is a longer term retracement from the decline off the highs in 2011. Okay, we'll cross that bridge if we get there, but right now, the downside's at risk heading into 63.50. Questions, comments, concerns on crude. Here's what the near-term picture looks like. Again, just kind of working out the slope levels. You can't make this stuff up, guys. Basic slope resistance. You have no clue if this is going to hold, but we tag it a third time. Looks good. Tag it a fourth time. Solid. Take a parallel. Work with some of the lows that we've made. Here's a perfect confluence with that 618 that we just talked about. So even on the near term, confluence support, right? Confluence support. So that's crude prices. Comments, questions. Number 8. Last but not least, and then we'll jump into your questions, guys, is gold. We've been following gold prices on this decline as well. Very similar to what we've been looking at with crude, in that we're coming into a pretty big level of support. You just want to be mindful of. Here's gold on the daily chart back at the start of the week. We were talking about this consolidation. It was ridiculous how many days this thing was consolidating on a closed basis below 1215. Support 1204, downside break. Your initial target is 1180. The bigger one I think we do need to respect is 1175. Okay, and that converges on the 50 line for this down slope we were working with off the yearly highs. Here's gold now. Man, I mean, didn't think it was going to be quite that quick. Here's what it looks like. Ridiculous. Okay, here's the daily chart. Same daily chart. Look at that coil. Final breakdown on the 18th, or excuse me, on the 13th, and it's been kind of a one-way trip ever since. So this was the last region that we were looking at. It's sort of a big level. Look what happened today. We closed at that level yesterday. We collapsed below last night. Look where this thing found support. You can't make this stuff up. Okay, you can't make this stuff up. Now, does that mean I'm bullish? No, but if we close the day in this region and we get back above 1180, which is the former swing low from January of last year, or the late January low, I should say. January low is deeper, but you get the picture. If we get back above that 50 line, which was support, right? Then I'd be starting to think that this is a more significant low. Today, the only thing we're looking for is how we close, because if we take this into a line chart, it looks like we didn't even make a break. right? Classic fake out stuff. Really be careful here. If you're holding shorts in gold, well, I wouldn't be holding shorts in gold. And at this point, personally, you're deep in oversold territory, so I don't want to tell you to bail out of the condition for no reason. But the reaction that you got there is, pretty clean. It's pretty clean. I just want to respect it. So if we get a material close above 1180, I think recovery. We'd have to rework the levels, look for a broader retracement. I think at that point we kind of cross that bridge when we get there. But here's the intraday charts. And again, highlighting how clean this slope has been, guys, off the yearly highs. It's just ridiculous. Median line support, a little messy there in early June or early July rather. We got right back into it. Median line support, break saw acceleration, resistance, pivot on both sides, resistance, resistance, lower parallel support. All right, so the levels look pretty clean. We're back from oversold conditions on the intraday level. Even if you zoom in on the 120, even the 60 has us coming way back from oversold. So is this just a corrective bounce and then we move lower? We'll see. The whole point's going to be to get a daily close above 1180, specifically that 50 line. All right, questions on gold prices. Okay, that is number 9. All right, let's jump into your setups, guys. Peter wanted to take a look at SPX. Yeah, so here's what SPX looks like, Pete. I'm of the mindset that this is still going to fizzle out again. Just my humble opinion. I don't, necessarily think this stretch has legs yet. We could get higher. Okay, the 618. This is the 75% line by sector of the pitchfork. Let me do this. I'm kind of trying to work backwards here to show you what we were looking at. You remember earlier in the week, we were looking at the recovery. First of all, let me take a step back even further. Here's the daily chart for SPX, all right, Pete? 28.59 for those of you who aren't here. We were talking about that level for a couple of days, the 1618 extension off the low. You had the upper median line parallel up in there. And we spent 3 days testing that level before pulling back. We talked about support at the monthly open, converged on the 50 line. We saw a little bit of a rebound here. The break below again yesterday fizzle out just ahead of the 100% extension. 27.97 was the downside target. We fizzled out just ahead. So keeping in mind where we're coming from, right? Pretty strong divergence into slope resistance, into the yearly highs. The high day close for the year remains intact. That's 28.51. We kind of came right into that zone, pull back. So I just wanted to show you the bigger picture here for SPX, right, Pete? So right now, all things held constant, here's your monthly open, man. You made a monthly opening range high. You can call that, I guess, the monthly opening range low. It's kind of late in the month on the 15th, but it's not much of a clear conviction on the daily. As far as what we're seeing here, I think you could get a little bit of more recovery, but my point being is that the reversal here, I think, kind of looks for a new low still. Here's what it looks like in the intraday chart. This is the slope that we tacked on, okay? We turned right ahead of 618. We rallied right into the 50%. That was the 75% line. We highlighted that as a confluence area. We slammed lower, right? Now we have to do some adjusting here. The retracement gets extended to here. 618 drops to 28.38. Okay, I'm not going to stress that 764. I'm just going to look at these highs. That's basically your new bearish inval. Ultimately, or ideally, I should say, you fizzle out ahead of 28.38, 618 of the decline. If this is moving lower, I could be completely wrong. Whoops, that's disgusting. If this is moving lower, that's where you'd want to see this thing fizzle out. This is the breakout level that would mark resumption, targeting 28.76. I still, again, the indecision that you're hearing in my voice is because I don't know if this satisfies. I don't want to get too hung up. Markets don't work in a vacuum. Maybe that was the extent of the correction. ideally that was the target that we didn't hit. So, maybe it turns from here and does make a final sort of stab at that 100% extension. I just think below 28.46, you're not really out of the woods yet. Pete, do you have any specific questions on SPX? I mean, look, the reversal was something we had to pay attention to, right? I don't think that's kind of up for grabs. Yeah, divergence on a new low in price. Again, the 618, look at that. 618 confluence on a close basis, at least on the 2-hour. All right, nothing else. So let me get rid of that 618 at this point. Real strong move, right? Real strong move. So I still think he fizzle out. Momentum still below 60, right? No change in behavior as far as the momentum profile is concerned. So he says, Peter, no, I just wanted to see your idea what's happening. Yeah, that's kind of my take on things. Now, look, there's some news that come out overnight with regards to China sitting down for talks as far as the tariffs are concerned, and that's probably going to give lift to some markets. Main thing that the headline's been running with is, tariffs and trade wars, and you've seen trade wars be like the keyword on Google search for like months now. But you get my point, right? So if you do see some sort of alleviation, some of that euphoria from announcement that there is some sort of agreement in talks, yeah, I still think you probably travel a little higher. Um, Structurally, or at least from a technical standpoint, you're just not out of the woods yet. You're not out of the woods yet. I wouldn't call this a resumption trade yet, right? So, Peter, hope that offers some color. Again, I don't actively trade personally the SPX, so just kind of my take on what we're seeing in price. You also want to take a look at Kiwi yen and then Euro yen here for D. So Kiwi yen, I haven't been following, Peter, but here's what the daily chart looks like. I tweeted this, or I wrote this earlier to you in the session before the webinar. 72.66. It's actually the 2016 low day close. Okay, right here, believe it or not. So that's basically where we grounded out on a daily close basis. We kind of probed just below it on the gap here. Actually, no, on a close basis, we still respect that. Look at this. Right? So how would you look to approach trading this, Pete? I'm not really sure. You're not quite at slope support. Could be a lowered floor type of deal. You're coming back from oversold, so I don't really want to kind of like try to press the downside, but it's sort of a low conviction trade for me, to be quite honest. Let's see what price action says near term. Yeah, there's not much for me here on an intraday level. Put a gun to my head, I would say look for a little bit of a rebound. My problem with this, Pete, is that, and I guess this goes along with your Euro Yen trade D as well. I kind of like both those pairs higher. We were talking about dollar yen. I want to see 109.90 on dollar yen. So if that's going to happen, that's yen strength. If we've been talking about the euro rebound, I mean, I've been playing alongside, so I don't know. Euro yen, Kiwi yen, they're kind of both in the same pot. But here's Kiwi yen. Let me go back to it. Where'd it go? There we go. Here's Kiwi yen. It gets its times or gets these periods in time where you see clear structure, you see really clear stuff to work with. I just don't know what you do with that here, Pete. Again, pistol to the dome piece. I'd say if it drops lower, look for sort of exhaustion near that lower parallel. A breach above 74 in my mind would look for recovery. 76 would just be sort of a soft target to the upside. But low conviction, I still think you have to wait for a resolution of this near term. At least a weekly opening range to give you a little bit of a tell, but low conviction. All right, Pete. Wish I had something a little bit more interesting for you on this, but yeah, I kind of think we're pulling teeth with this. Euro yen for D. Euro yen looks like this. Let's take a look. Key weekly resistance still going to be 127.43, 127.56, this region right here. You got slope there. You got former swing lows from last year, specifically the lows that you made back in August. And the close low week for the year, the low week close. All of those reside right here. The actual low week close comes in at 24.62. So yeah, this whole region. This 100% extension, the only reason I'm hesitant to put that as sort of a major target is because this was of the initial drop leg from the yearly highs. So it was the measured move on this decline. Fast forward here a couple more months, I don't really know the merits of which we'd want to put too much emphasis on that, but the obvious point is the objective yearly lows, right? We kind of turned right ahead of those. So key range of focus 125, 124.90, let's call it 127.40. That's sort of the range that you need to see cleared out to give you some conviction on euro yen. Again, it's tough. D says so. D got stopped out. What side were you playing on this again yesterday, D? I can't remember. We were talking about this yesterday, right? Here's the daily chart. Hmm. So at least in near-term structure, I remember we looked at this yesterday. At least in near-term structure, that's the level we need to see breach. That'd be an objective long bias near-term. Period. Weekly opening range is pretty well set. You just tested the weekly opening range lows, and overnight trade failed miserably. So you're essentially unchanged on the week. Guys, one thing we want to always be mindful of, part of being a successful trader is knowing where to look, right, and what price action we want to be giving credence to. When price is doing something like this, it's essentially you want to be in and out. You don't want to press a trade like this for a long-term position. You're basically range bound at the monthly opening, the monthly range lows, which is just above a major support. For me, the trade here for me is this, D. Either we get the ground into 123.50, that major key support zone, 618 retracement, 2017 open, you got slope down there, the works, right? Either we get a drop into this key zone here, nice pivot in price, and then we'd look for a larger recovery, a larger position for the long side, or we get a break above this near-term descending channel formation, and you look to play the recovery there. Immediately, play the range if you see fit, but it's a low conviction position here too. And again, relative to the euro dollar, relative to dollar yen, how those are performing, it's no surprise to see this price action kind of go lateral like this, right? So we just want to know where we're focusing our attention here, and what should take the bulk of our attention. But throw these at Jamie. I know Jamie's been following the yen crosses a lot closer than I have. Pound yen is something he's been talking to me a lot about. So Jamie will be up in a little bit over an hour and a half here, guys. If there are no other questions, we're going to wrap that up here. If you do, let me know. Drop it on the message board real quick. That was number 10, 11, and 12 with euro yen. And again, watch later tonight. We do have RBA governor making semi-annual testimony there, so may shake things up on the Aussie on the back of the release that we got from the RBA last week. But heading into the close of the week, it's going to be CAD, CPI tomorrow, and the University of Michigan sentiment surveys out of the U.S. Keep that on tap. All right, guys, have a great weekend, says Peter. Thank you so much. Hey, same to you, sir. I appreciate that. Guys, have a great weekend. Jamie will be up in just about an hour and a half, and I will see you on Monday morning for the free session on Daily FX, back here on SB Tuesday, Wednesday, and Thursday. Cheers.